What is up? I'm Jason with the Honest Finance channel, and today I want to talk about the 3 best stocks to buy in April of 2018. Now go ahead and watch this video for entertainment purposes only, and make sure to do your own research before you do any type of investing. It'll always carry risk, so just make the best choices you can and hold on for the long term. Now this video is going to be pretty quick because you already know who these 3 companies are. But I'll give you some basic stats about these companies so that you can make your own assessment as to whether or not you want to look any further into these different stocks. Now the stats I'm going to be showing here are from a very shallow perspective, so just make sure to do your own research before you do any type of investing in these stocks or any stocks in general. Now first up is Wells Fargo Bank, and if you live out west, you definitely know who these guys are. Wells Fargo is 100% in the big bank sector, and their shares are actually looking pretty affordable right now because of a big dip that they've recently had over the last 3 months. Currently, the shares are about 20% cheaper than they were just 3 months ago. So now is the right time to buy if you're looking into Wells Fargo. Also, the feds have been raising rates, which sucks for consumers, but it'll make the banks more profitable. And that's just because they'll be making more money from our loans. Wells Fargo's ticker symbol is WFC, and their current share price is about $52. And that's a lot better than the $65 it was just 3 months ago. They currently pay out a dividend yield of almost 3%, which is really good for a bank. And their current PE ratio is about a 13, which is still pretty good for the banking sector. But their forward PE ratio is looking to be about a 10, so that's good because their projected earnings look like they're going up. Now over the last 12 months, they've dropped about 1.5%, but over the last 5 years, they've actually gone up 63%. Now that definitely didn't outperform the S&P 500, but I think things are going to be looking really good for Wells Fargo over the next 5 years. I've actually banked with them for about 12 years now, and I've seen all the changes that they've gone through. They've got about every single feature you could ever imagine on their website, and their rates are really competitive when it comes to all their different types of loans. So overall, Wells Fargo is definitely a stock to consider right now. Now my next stock pick is Walmart because they're actually in a little bit of a dip too. Walmart's ticker symbol is WMT, and their current share prices are going for about $88. Walmart's got a current dividend yield of about 2.4%, which is really good. Now their current PE ratio is about a 27, which I'm not in love with. But their forward PE ratio is looking to be about a 17, so that's really good in my opinion. Walmart's last 12 months did really well with about 29% in gains. But the last 60 months have been really lousy at gaining only 33%. Now I know that 33% isn't a good thing at all, but Walmart's online presence has really been competing hard. Jet.com is now a part of the Walmart family, and their business model is perfect for today's online consumers. And seriously, check out Jet.com if you haven't already, because I think they still give you 15% off your first 3 orders. It's a really good website. I'm confident that Walmart is really going to push forward over the long term, so I would consider buying in right now while it's low if you consider going with someone like Walmart. Last on my list is Southwest Airlines. Now they've got my attention right now because they're currently in a dip as well, but they're also expanding their domestic flights like crazy this fall, and so they're looking to have a much better profitability. And just looking at the basic stats, things are looking pretty good from the outside. Southwest Airlines ticker symbol is LUV, and their current share price is about $58. Now they do pay a dividend, but it's only about 1%, but at least that's something. Their current PE ratio is about a 10, and their forward PE ratio is also going to be a 10, so their projected revenue isn't really going to go up much soon. But being stable is a lot better than heading downhill. Now over the last 12 months, Southwest Airlines has grown about 12%, but over the last 5 years, they've grown 346%, which is way too high. Now I'll take 350% any day of the week, but that's not going to happen very often. So with all of this information, it actually looks like the price per share is a really good value for Southwest Airlines, so now is the right time to buy if you're looking into them. Now I know that things have been pretty volatile in the stock market lately, but that's actually okay if you're looking into buying into any of these really good companies, because now their shares are on sale. Now these are my 3 stock picks this month, so go ahead and do your research if you're interested in learning more about these different companies. Once again, I'm Jason with the Honest Finance channel. Feel free to subscribe to my channel if you're into any type of financial topics, or at least give this video a like. That's all.